Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So agenda today, we'll do the market update. We got a few earnings trades that have just started for Q2. Just going to go through some ETF charts and just want to let you guys know we're not going to do a meeting next Wednesday. Yeah, we had the 4th on Tuesday. We just figure a lot of people will be vacationing, and I'm going to take the 5th off too. So we just figured, we'll take a break and resume the week after that, which will be the 12th. So next week, the 5th, no meeting. We'll give everyone a break. Okay, so let's get started. Overall indices, same as last week, NASDAQ, SPX in 1, and Russell in 5. You can see the green pie shrunk a little bit, so 69, about 10% drop over the week, and 1s and 8s are pretty much even, 30-30. So let's take a dive into the market pulse here. So this is the green pie. So normally we talk about, okay, things come up, level out, start turning down, and it's almost like gravity. It's going to cross back over. So it looks like we've hit our high point. At this point, it's just kind of like gravity where, they're going to flip over. And that, I would say, happens over 90% of the time. Once we reach that peak and start heading down, even though, we had a nice big day yesterday, it still just seems like, it's like almost like a gravity thing. Now, it's not guaranteed, but I would say, 85, 90% of the time, once we kind of found that peak, things will turn over. So that's just what it looks like here for bull bear. I did want to point out, we are getting some.
Josh, you're going in and out.
Oh, yeah, I don't know if it's my internet or not.
That's better.
Better. Okay. Yeah, it's
right there.
Not over the microphone apparently. So, we did have those highs back here leading up, but this have pretty much dropped. We like to see the highs, to get a bullish case. So, we've had a few little spikes, but I mean, you can see here, this is pretty much like a year with nothing, new highs. So this is like encouraging, but like I've told you guys, I'm just not sold on this bull case yet. We have SPX, had a big run up, and then Russell pretty much doing nothing. So, the breadth of the market just still isn't there. Let's look at the individual states real quick. Okay, so 1s and 8s. So, this whole bear timeline, a lot of these, ones, state 1s crossing 8s have been the top. So that kind of broke back here in February. So, we did break here. So that may have been, that's kind of the market top right there. So it looks like it's, the 8s are starting to come back, and that kind of jives with what was happening on the bullish bearish. We'll have to see, if the gravity effect on the bull bear follows through. But you can see here, since the 16th, the 7s and 5s have been dropping. So, to see a sustained rally, obviously those 7s pop first, and then, we need the 5s to follow through. So 7 to go to 5, and it's just not happening right now. So it's not looking like this is going to be a sustained run. Obviously it can, turn on a dime, but as far as, just looking at the bullish bearish, it looks like, almost, the gravity is kind of taking effect where we'll get across in the next week or two. So it's kind of where we're at. So it's mostly 8s, those 7s, instead of going to 5, they're going to 8. So, okay. So SPX, I'd say the only encouraging seeing right now on this chart is, we held that target 3. We talked about that last week. We'd like to see that hold. So it's right at 43.40. So, dropped down and then, had a big pop up. So that's the only real bullish sign I'm seeing. So, if that can hold, obviously we can get you can get a good run off of that if that's support. So we'll see in the next few days if that level holds. If that breaks down, then obviously we're looking at state 2 transition, and maybe a test of the 50-day. But this is the bottom of the range right now, that 4,200. So, but obviously been in here a long time. A couple weeks past normal. So this is the key number to watch on the downside, I think, for the markets. The Russell's in pretty much near middle of the range. So this would be first downside level that I'm checking for the market, 43.40, and then the other would be the 50-day. Then obviously after that's the 4,200. So let's look at the chart here. So the 43, sorry if there's some background noise, it's the kids. So that's the 43.40, kind of right in this range. So next level down below that, and that's target 3 would be this 50-day. So, last week that meshed with that bottom of our range, 4,200. So now it's, obviously keep moving up, 42.30. So that's your next kind of key level, I think. If that 43.40 breaks right here, that 50-day obviously been important in this run so far as support. We like to see this for bull cases, that 50-day providing support. So, if we break through here, this next level, then, level below that's at 4,200. So that's the range. It goes up to 46. That's our current range. And the previous range was at 38, coming down there. So first level support, next level 42.30, and then 42. So still kind of same range, but obviously it's going to be critical levels overall. My personal opinion, I think we can still hold this, even if we have a minor pullback, with the bullish bears crossing, the green crossing below the red. I think it's possible we still hold that 42. But that's just SPX, obviously. And, that's been propped up by some of these big names that really, had a good run. Your Microsoft, NVIDIA, all those. Now, Russell, a different story. This is our ongoing breadth problem that we've been seeing for quite a long time. So this was a good sign, a little bit, was the support. So it bounced off, that stop loss area. So we got down to 18.13. So in between 1 and 2, had a nice little pop. So here's our range, 19 to 17. So kind of in the middle of that. We had a good day yesterday, but I don't think, today I think we're a little mixed, down a little. So this is our big upside resistance for the market overall, 19. So we've been harping on that. It's tried to break, and fell pretty hard, but I think getting a little bullishness here just with the bounce off the stop, and then the SPX supporting on target 3. So those things are slightly bullish. What to see those hold, but this is our kind of big one, the 1900 to the upside. That's what to get bullish in this market, we have to get above that and hold, obviously. So let me in and out this real quick. So it's been about a year in this range with a few breakouts, but sort of lack of breadth. Obviously SPX has gone up a level from where it was, but like I said, that's mainly driven by those kind of big names and not market breadth. So did bounce off. Let me clear that. So it did bounce off. That kind of coincided with the 1800, the stop losses right on the 5200 area. So that would be something you can watch kind of near term. Hadn't been a strong indicator really for Russell as much as SPX, but something to watch. But obviously, our big one is 19. So we're a ways from the bottom, but that's the big one. 19. Keep harping on it. Just keep watching it till it breaks one way or the other at some point. I mean, we're not going to stay in this for another year. I don't think so. At some point, we're going to break. And market check. So let me refresh. So we're still above that target 3. So that's what I'd be watching near term. And then, Russell's kind of doing nothing. 10-year, pretty much 3.7, 3.75 kind of range. So nothing big there. Fed minutes. So, we're 28, we're a month out. So 80%. So it's moved up a little bit from, the previous week when we looked at it just slightly. So they're still factoring it in. And, no change on the long end here in December. So we don't want to go through that. Balance sheet. We did have a drop. So we're almost down to this level. So we're at 83.62. This got down to like 83.40. So we did have that pause kind of here a couple weeks. Usually it's only a week, but did resume. Expected to continue until they change their messaging. It doesn't seem like anytime soon. Like end of year, no cuts, and they're going to continue tightening. And we'll have to see if we run into problems. Once we get below this level, that's where we got into the Silicon Valley Bank and all those other ones. So as we get lower, really the thing to watch for the banks would be the rates, because their balance sheets, and hopefully they were trying to fix them. They got a little reprieve. But I don't know how much work they've done on trying to fix those and unloading. It's hard to unload those assets. So if the rates aren't, don't drop a ton. So overall rate curve pretty inverted. I haven't looked at this in a little bit, but you got the 2 and the 10, which, so we're over 1% again. So it did drop. We got well above 1 before, but kind of dropped below 1. Now we're back above 1 again. So we're still inverted. We've been inverted a long time. And you can see pretty steep inversion overall. Got good rates here, like the 6 and the 1 year, 5%. So, I think a lot of people still will be putting money to work in those treasuries, short-term income, high rated bonds, money markets. That's kind of low risk, high return, basically. So that's kind of where I see capital flowing near term, until things change. This is what I was going to show you. Lee was asking questions earlier about commercial, but I did find this the other day. This is Airbnb revenue, top 10 cities, just a year-over-year comparison of pretty much everywhere, having pretty drastic drops. This is like revenue per month. So you can see this huge drops in a lot of these areas, some of the major cities. We're in Florida, we got Lakeland, Orlando, pretty big drop. So I don't know how much that's going to affect people. A lot of those are people with multiple homes and all that stuff, but could see some pinching, if if people have a bunch of houses and their monthly revenue went from 5,500 to under $3,000, some point there'll be some problems there. And this is just residential. We've been talking a lot about commercial. I would assume commercial has, maybe not this drastic, but there's still a lot of empty offices, things like that in those big complexes. I mean, even in the ones I work, there was just on my floor, 1, 2, 3, 4, 5, and now we're down to 2 on that floor. So out of 5, just on that, one floor, the multi-story. Most of you guys have been to that office, so. But just an interesting thing, saw this. All right, I'll open up to questions, comments.
Gosh, just one thing about this Airbnb snapshot, thought provoking. I'd like to, and I know it's not out there, but just I wonder what the numbers were in that thing pre-COVID, and whether the 2022 numbers I would think are pretty much a bubble.
Yeah. I don't know. I'd have to try and do some research. This kind of really
interesting.
Yeah, proliferated COVID time. But it's kind of like everything. The PMI, the M2 kind of goes like this and then like this, right? So
Yep.
just kind of like we were talking with Lee. I mean, this takes a while to filter through the economy. I think inflation is biting the consumer more and more, and then we have this whole student loan thing starting again. I think September that turns back on. So just consumer has less and less money with prices going up, and it just takes a while to trickle through. So obviously demand is way down in these places. Haven't seen it in rents too much though yet, or home prices. Kind of watch that a lot. I mean, it's like I think we pulled that up on that. We talked about that, Joe, right?
Yeah, it said year over year. I think they were down, or no, they were up 4% year over year.
Well, that one was up 4. The other one was down.
Yeah, on a month to month.
Schiller was down.
Yeah.
Right. Yeah, here it is. So Schiller year over year was down, but whatever this one is. So we pulled them both up, but you can see, I mean, it's just kind of, it's just this this is the same chart like everywhere, right? It's just, inflation, all that, Fed, injections, all that, and then this hits a point and just rolls over and comes all the way back down. The other one was similar, it just pretty much the same chart, just like a different numbers. Excuse me. Let's go back one. I haven't seen this one before, but which one was it? Year over year there. Same thing, right? Same chart. Just baseline is apparently 5 on this one. The other one's 0. So I don't know what this one is, but we just found it kind of strange that this one's 3 and this one's down 1.7. So this one I've heard about, so that's the one I kind of follow. So same chart, a lot of different things. right? Okay. You guys have questions, comments overall on the market? Don't be shy.
I don't see much change from last week, Josh.
Yeah.
Pretty much is what we said last week, this week, and probably next week.
Yeah. I don't know if you're on, Dave. We're not doing next week. We're gonna take a 4th of July break. So hopefully, this advice, this analysis will last 2 weeks, I think. So, okay. That's it on the market. I'll just pull up. This is the new Delphian platform interface. So we've got access again, making tweaks. Joe's working day and night on this while I'm trying to do the trade analysis. So we had a couple trades, both bullish pre-runners for Q2 start. So the first one is Travelers. That was on the 21st. So that one down a little, down decent today. And then the other one's Capital One. So that one was entry on the 27th, so yesterday. So it's down a little. Ended up on that day, but it's down today some. So they got time on these 18 to 16 days. So here's the earnings. So we get till the 19th. So we'll track these, see how they do, but we'll start picking up. I think next week things start picking up a little more for earnings. These are just kind of the first two. So any questions on that?
Just a
Josh,
comment from, oh, go ahead, sorry. Go ahead,
No,
Joe.
go ahead, Dave. No, go for it.
I was just gonna say that I'm watching Micron is out tonight, and it's like the last of the earnings cycle, which is, in my opinion, like the first of the earnings cycle to come, kind of thing for like semiconductors. So we'll see how that goes. But I think that might be that tells me a lot when I listen to that particular one. We'll see. I think they're supposed to be down this quarter, and they're still looking up. This is from last quarter's. I'm just regurgitating last quarter's notes, but supposed to be not a good this quarter, but the fourth quarter is the quarter they were looking for a turnaround, which is a lot about, I think, a lot of similar comments to many of the other conference calls that I've listened to is a percentage of them. We're all fourth quarter, it's not going to be too good till the fourth quarter.
Yeah, and they're all calling for a recession, and it just doesn't make sense to me.
Yeah, all that was while there was like one and done for Fed cuts, and now they're like pausing only. So that could be a little optimistic, I think. Still, we'll see. I'm hoping that I'm hoping the economy is good.
Yeah, definitely. I don't think anyone's pulling for a recession.
Right.
I guess if you're long-term short the market, but it's going to pull up Micron.
While that's spinning, Josh, the only thing I wanted to say with regards to earnings, we talked about this a couple of weeks ago, confirmed dates versus estimated. For anybody who's trading that stuff, I did a little bit of homework in the last week on confirmed versus estimated. As we said before, we've got great data behind the scenes where we can really pinpoint 9 out of 10 times at least within a day or two, even if that earning isn't confirmed. So if you have any specific questions about an individual issue, don't hesitate to email me and we can go through it together. But, those estimated dates, for the most part, are really pretty close within a day or two. I'd say 9 out of 10 times.
Mm-hmm.
There's your Micron, Dave.
Yeah. Got the nice, kind of typical move, right? It's hanging in there. Yeah. I don't know. I don't have my micron crystal ball for the move.
So are we thinking it would change to a state 2 or 4 or
Oh
something?
yeah, I mean, if you have a down day, I'd expect it to. I would
Okay.
say,
Josh, could you scroll down just a touch?
Mhm.
I think we'll know more tomorrow, Lee.
yeah.
Yeah.
What's your feeling, Dave? You think it's a down or what?
Okay, well, I can tell you a couple things. If you look back on the May high there, that was like during the AI flap kind of a thing, and
Yeah.
so a lot of the memory and faster computing cycles are the backdrop of what AI needs to function. So I think that was the reason for that. And there's kind of a pullback here because we're still challenging delivering anything that's really good stuff to China. So,
Mhm.
as a matter of fact, I think NVIDIA, they came out and said, well, NVIDIA's liable to be on the chopping block for, can't sell to China coming soon. So that's what has affected a lot of the high performance semiconductors is like, well, if we can't sell them to like a major buyer, what do it's going to impact your sales. So,
Right.
and that's hurting the semiconductors. I think when otherwise this would be a pretty good cycle to sell to be buying into. So I'm trading but not buying, if you will, in some of the semiconductors.
You're not investing, you're trading.
I'm trading, yeah.
Yeah. Well, 50 looks like a nice number. Yeah. Nice double bottom on 50.
Yeah. It's a memory company. I mean, if you're believing the AI hype, there's just going to be memory is going to be more and
Yeah.
more in demand, and there's just not that many companies that are making memory chips. So there's only a few. So trade them is what I'd say.
I don't know what that 60-55 put spread brings, but you get through the announcement tonight. I think that would be a decent sale.
Yeah.
And maybe even the 65-60, but to be safe, 60-55.
Mm-hmm.
Yeah,
if we
the
get
call credit spreads might be a little bit safer to play. Just thinking, I'm thinking out loud here, so I don't take that to the bank or anything. But
which strike are you talking, Dave?
Pardon me?
Which strike? Which call spread?
Let's see.
Go
back, make it a little bit bigger, Josh. Even a iron condor 70-75 call spread and 65-60 put spread might be interesting.
Talking.
I don't think it's going to move a lot. Put it that way. I doubt it will move a whole lot. That's what I'm thinking.
Yeah. So you would do 75, 70, 60, 65 and give it a little room in there. I mean, it's right in the middle. It's right on 65, right?
Yeah, you probably won't make too much on it, but with those numbers, it's probably I don't know. Can you? I do it right now. Hang on, I'll go. Somebody comment somewhere else. I'll go price those out real quick and see what it says.
Yeah, you could do the iron butter. If you don't think it's going to move much, you can just do iron butterfly at 65, right? With the 70 and 60. If you don't think it's going to move much.
Yeah.
Hey, Josh, you want to pull up the implied vol chart just to see if they're up going into the number?
I can look at the
market maker move is about $4.25. So that's what the market maker move is.
Mhm.
I think that, and I would guess that's fine. But
That's a short term.
Hold on, let me make sure. Hold on, no, I take that back. I was looking at the wrong expiration there. 2-day expiration.
I don't
Market
see
make
it.
move. Yeah, it's still 4.25.
Yeah,
We're toward the end of the week, so it's almost 4.5 for Friday. For going into Friday. I'm gonna do that. Let me do the 65,
Yeah, it's-
60. And the 60. And what did I say? The other side was the 70, 75.
yeah, it's a pretty good risk reward. I mean, just
Yeah, it's
basically,
about 2.25 for a $5 widespread, so not too bad.
yeah.
That was a condor. That was the 60, 65 and the 70.
Uh,
60, 65 and 70, 75 comes out to 2.25 credit for $5 widespread.
Hmm.
For 2 days.
yeah. Well, if you're right, it'd pay off, but. Okay. Interesting. Well, we'll see. I don't follow Micron that closely, so. I'd have to defer to Dave on that. So. All right, anyone else before Joe gets going here? All right, you ready, Jim?
All right, Jess. Up charts. Let's see here. There we go. Where are we? Okay, there's the new UI. So, just a couple charts, and then, in terms of the sectors, really over the last 3 weeks, really virtually very little has changed. We've had basically 8 bullish sectors, 4 in state ones for the better part of 3 weeks. I guess one thing that changed a week and a half ago was energy rolled into a state 8, which, if that gets any legs, obviously that could help the inflation front. But let's see, a couple things, bigger picture. SPX and NASDAQ, we occasionally will talk retracements. Certainly the upside move in both SPX and NASDAQ has exceeded the 618 retracement, considerably. That's been the case, but just reiterating that. So here is, SPX. It's been a heck of a state 1 run. The basically 4,300 level was the 5-inch retracement, and it's basically a week and a half ago. I guess it was the 16th where we got short-term highs that we've since pulled back from, but those short-term highs were up around 44.50, as Josh pointed out. So good, I guess leadership there, if you will, and from a timing perspective, we're at 56 days, as Josh points out. We'll see whether the target 3 lines, hold a support. NASDAQ, same thing, well in excess of the 5-inch retracement. And these charts are taken into consideration, going back to the fall of 2021 highs, just to give you the perspective on the magnitude of the runs. Hell of a, state 1 run here as well. 14.4 was essentially the 5/8 retracement. Recent highs have been, north of 15, close to 15.3. So, a lot of money flowing there. Then in terms of the sectors, as I said, 8 still in bullish states, but I think, hard to say you know, I think Dave mentioned a couple of weeks ago, maybe we're just gonna kind of move sideways, you know, for a little while until we get more Fed news. But, you know, XLK, which is essentially Apple and Microsoft, they both make up they're 23% each of this thing. You know, we're close to an all-time high. You know, those highs back, you know, December of 21, they're all-time high. So I think, you know, if the market is to be strong, you know, before long, you're going to be reading about, you know, all-time highs in two of these sectors. And that would be, you know, this particular sector, as well as the industrials, which, let's see, it is, industrials are here, close to all-time highs, you know, unlike the tech sector. You know, this is, you know, just for the most part, great American companies, you know, and none of them in this sector make up more than 5%. You know, you get the Raytheons and things of that nature. So I think they're kind of two to really keep an eye on. This one actually has a long way to go. It's only, you know, 3 weeks into the state one, where going back to XLK, that is well beyond. And actually, for our call in a couple of weeks, I'm going to go back and do some homework. You know, probably a year ago, where I was talking about extremes in the various states. But, you know, XLK has been in a state one for 81 days. I got to go back, see if that's, you know, an all-time state one. And then kind of most importantly, from my perspective, I want to see, you know, where was the market 6 and 12 months later. So, you know, when we get back together in 2 weeks, I'll have that information. But just to see what kind of leadership and maybe what it foreshadows about the market. You know, the industrials certainly slower moving, but again, banging up against all-time highs, which, you know, kind of gets back to earnings. You know, is this a Goldilocks soft landing? You know, from an earnings perspective, it sort of seems to be up to this point. Just two more, you know, again, just a perspective, you know, in communication stocks, you know, not banging all-time highs, just, you know, from the highs of 2021, we're kind of at a midpoint here, you know, been good leadership with a good, you know, state one run, certainly. And then, let me see, I think one more there. Yeah, the XLY, the consumer discretionaries, you know, from a perspective, same thing, kind of not quite a 50% retracement there. They've had, you know, pretty good state ones. This is the least, I guess, the smallest run we've had of a state one in the sectors recently. But you know, this along with XLC are just kind of at midpoints, you know, from a retracement perspective. Last one I'll pull up is energy. You know, we went into a state 8 just over a week ago. So again, whether, you know, from a chart perspective, this thing's kind of sideways with a downward bias, whether it's going to turn out to be a good state 8. If that were the case, I would think that would help the market for sure. So just, you know, something to keep an eye on. Average move in a state 8 here, we've had 31 of them, is 10%. So we'll see whether that can turn out to be a tailwind for the markets overall. So that's all I had today. Happy to take any questions or turn it back to you, Josh.
Yeah.
Say Joe?
Yeah, Dave.
Dave again. Yeah, just as a curiosity point here, I pulled another whole group of folks that are on a different forum. They're actually Schwabies, you know, Schwab that bought TD Ameritrade kind of group, as to which sector they figured the poll was, the question was, which sector do you think would underperform and which sector do you think would overperform during Q3? So from July to October. And the biggest winner so far, this is about a 4-day-old poll is all, so take that for what it's worth. I'll tell you next week too, but XLK was the big winner for the outperform. And the underperform honors went to XLRE for real estate and utilities
Yeah.
for the next quarter. So I thought that was interesting. Well, an interesting
I agree
group.
with it. And you know, when you look at you know, real estate and utilities, they pretty much have, you know, been in the tank for a while. So, you know, basically the Schwabies are saying, you know, more of the same. A question: do you know whether Randy Frederick at Schwab is part of that group?
I do not know who is in or out. Well, they're all, you know, kind of names, whatever you're going to call yourself. So I don't know who is who, but
Randy kind of heads part of the education, or maybe all of the education. I'm not sure if it's all the education, but he oversees a lot of the education at Schwab. That's why I asked Randy Frederick. Good guy.
I see. Well, this is a group of retail investors, so they're not company people. They're clients. Right. They're all clients. So, but the clients are thinking. Well, and utilities in the summertime have to pay through the nose, especially if they're fossil fuel based. You know, they're using natural gas to generate electricity because it spikes in the summer when the air conditioners go on. So I'm not surprised at all to see either one of those actually where they are.
Well, thanks for bringing it up. We can compare those notes, you know, at least in a couple of weeks, but certainly as we move through Q3.
Yeah, these polls last about a month. So like I say, it's about 4 days old. So I'll give you an update, you know, for each one, you know, next week. It's sitting out there. So it's collecting data as we speak.
Right. Okay. I'm trying to pull up utilities here. You know, we are still and thank you all for the patience with lack of speed with the platform. You know, that will get resolved in one of these days, but there's your utilities, you know, so.
And it's probably the commercial part of real estate that's pulling down XLRE, but I'm not sure how it's divided up into subgroups, but you know, commercial guys are getting most of the negative headlines for sure.
They are, and that, yeah. RE, interestingly, you know, just went into a state 7. So for the first time in quite, let me just see how long it was in state 8. It was a hell of a long time. Well, state 2, 13. That doesn't make any sense to me. It's showing 2 days, a day ago. But anyway, thanks for the thoughts, Dave.
Okay, anyone else? All right, well, we appreciate everyone tuning in. Just a reminder, no meeting next week, so it'll be 2 weeks from today, we'll reconvene. So thank you all and have a good 4th of July.
Everybody.